What's up, everybody? This is Sunko, the Korean bro. Today is 2022, March 21st. And tonight is Monday night. And last night we talked about some of the terms related to stock market. And I was talking about the PER. As far as I remember, I was talking about price to earnings ratio, and in the middle of talking, I ran out of time, so I uh call it a day. Uh, but tonight, we'll talk about articles again, and then we'll look through some of the terms written on this paper, and then we'll see about it. Okay. All right, what's happening with stock market lately? Let's first go to Yahoo Finance and Zach's investment. Oh, looking great. Udemy is up again, 12% tonight. It keeps going up and up and up, right? Um, Uh, Tonight is March 21st, and I'm like 4 days behind. And on 25th, my monthly income mm, will be sent directly to my account. Once that happens, I'll be investing into it right away because it's looking so good. Uh, if not now, when, right? Come on. It's all looking so good. Sophie Upstart Holdings, it's all looking so good. Up 7% again. Sophie, even 9%, 10% up. It's going up and up and up. It's just still cheap, right? Um, Three stocks down 50% or more that Wall Street thinks could nearly double. Three stocks down 50% or more that Wall Street thinks could nearly double. C Limited could shake off the issues surrounding its connection with Tencent. 10 times Genomics appears to be trading short-term pain for long-term gains. Sophie is preparing to up its game in the fintech world. Has lost roughly two-thirds of its market cap. Market cap. Since October 2021, Wall Street expects a big comeback for the stock, though, with a 12-month price target reflecting on upside potential of around 95%. The main reason for said limited huge decline is that Chinese conglomerate Tencent owns a significant stake in the company. India apparently banned C's top-selling mobile game, Free Fire, because of this connection with Tencent. There have also been concerns about the potential for the U.S. Securities and Exchange Commission to delist Chinese stocks from U.S. exchanges. In addition to these issues, investors are worried about C's slowing growth. The company's 2022 guidance projected significantly lower revenue growth than in the past 3 years. So why is Wall Street so bullish about C Limited? For one thing, analysts likely think the worries related to the company's connection with Tencent are overblown. More importantly, though, they probably think that C's Shopee e-commerce platform will continue to deliver strong growth for years to come. Hmm. 10 times genomics is still down more than 60% from its peak set in early November 2021. Okay, here is but analysts really like this genomics stock. The consensus price target for 10 times is nearly 85% higher than the current share price. The shift away from growth stocks in recent months has probably been the biggest factor behind 10 times. Down only 58% or so from its highs from less than 5 months ago. Analysts think that the fintech stock could bounce back in a big way with the consensus 12-month price target, reflecting an upside potential of around 78%. Bank charter earlier this year. This charter opens new doors for growth that Wall Street is likely counting on materializing over the next year. SoFi also recently announced plans to acquire Techniseas for $1.1 billion. Techniseas offers a digital banking platform that enables banks and fintech companies to quickly create tailored financial products. The deal could increase Office's competitive positions in the fintech world and potentially boost its stock along the way. So pity that I got ugh, on a small amount of money. Fever is up 10% again. Come on. Shopify, 18% again. Oh, come on. Hmm. Still cheap. Okay, let's go. Stock futures, mixed oil prices resume advances. The stock market is depressed. Apparently that's great. Berkshire Hathaway to acquire Allegheny $11.6 billion. Still eating at a restaurant, roars back from the pandemic survey. Tesla continues to dominate the US electric car market. And it planned to go private in $9.65 billion deal with Thoma Bravo. What price war on Ukraine fears, but US grower can't cash in. Oh. Here's what it will take to make stocks great buying opportunity. One of Wall Street's most vocal bears says, sell the rally. Wall Street legend. Three strong buy stocks showing monster growth. Dow Jones Futures, what to do after 4 market days that changed everything. The Snowflake stock buy or sell amid software sector volatility. whatever you're doing in the market is probably wrong. Software growth stocks to buy. Watch or sell amid non-stock volatility. As I'm looking through articles tonight, what I'm feeling is that I don't see any articles that recommend specific stocks. Instead, it's all about like general concept and what to do and what you have to do in this volatile market. Stuff like that. Kind of like uh, advice purpose articles. Uh, and let's go to market beat and let's see what it says about stock tonight. Yahoo Financial stock looks attractive down here. Okay. Wall Street uneven in pre-market after Bash Week. Yahoo Financial stock looks attractive down here. Saudi Arabia says it's not reasonable for high oil prices. After an overdone sell-off, it's time to sign for docusign shares. Goodyear Tire stock price going back in time. Dreamers buy Warren Buffett stocks for volatile times. Okay, this is it. Okay, one by one. The stock market is appearing that's great morning breath. Okay. This is fucking great. Let's see. This article first appeared in the Morning Brief. Get the Morning Brief sent directly to your inbox every Monday. Today's newsletter is by Brian Sozi, editor-at-large and anchor at Yahoo Finance. Markets have rallied nicely off the early March lows that were triggered by the start of Russia's war on Ukraine, but they're still dealing with a bout of depression. The percentage of individual investors who consider themselves bullish has averaged 23.9% over the past 10 weeks. So what has this level of depression historically meant for the stock market in the months ahead? You guessed it, a rally. Historically, these low levels on the survey have been followed by consistent and positive returns on a 6 to 12 month basis for the S&P 500. Only in the land of investing does bad equal good. Part of the market's resilience can be attributed to depressed investors' expectations, which suggests markets are already braced for and discounting some of the known challenges. Markets have also taken the recent shift in Fed policy in stride given investors were already pricing in aggressive rate path. Historically, the first rate hike tends to inject volatility. It goes on and on and on. And next, Tesla continues to dominate. The U.S. electric car market. Tesla continues to dominate U.S. electric car market by a large margin, despite price increases due to supply chain disruption and inflation. Here's what it will take to make stocks a great buying opportunity, says this strategist. Oh, shoot. I cannot read it. LNG limit will start in the energy industry, where Golar LNG has exploited some economic quirks of the natural gas industry to become a leader in the liquefied natural gas sector. And what else do we have? Metador Resource Company, another resource company, Intracellular Therapies. Okay, skip on this. Test faith in emerging markets. Investors were already reckoning with underwhelming emerging markets performance over the past decade. I'm For a brief moment, I thought uh, you were like one of spammers. You know, another person who came in. Uh, nice shot. Oh shoot! I cannot read this unless I subscribe it. Come on. And let's go on to next one. Whatever you're doing, the market is probably wrong. uh oh, I love you, darling, too. It would have been better if the guy who spammed on my chatting box was here. If he was here, he would have sent the message that you posted here. He'd be embarrassed. Love you, darling, too. Whatever you're doing, the market is probably wrong. It's hard not to follow the crowd, but it's worth trying. Sorry, everyone, but real money economist Paul Price has a bit of tough love headed your way. The little guy he wrote recently is almost always wrong. When they yank money out of equities, you should be doing the opposite. This is the start of one of the most classic pieces of investment advice, one which traces back to Warren Buffett himself. This wisdom advises that investors should trade counter cyclically to the market. When everyone buys, it's time to sell. When everyone sells, that's the best time to buy. This may be common wisdom, but cliches are cliches for a reason. Whatever you are doing in the market is probably wrong. It's hard not to follow the crowd, but it's worth trying. Okay. Mm. I read only a few sentences, but I feel like I'm getting what this author is trying to say. Like, yeah, of course, cliches are cliches for a reason. Uh, you know, mm. Let's read this more, and then I'll talk about this in depth. Okay. Uh, so pretty much, this is what author is trying to say. When people sell, you buy, and when people buy, you sell. Hmm. Do the opposite. That's what this author is trying to say. Oh, the camera angle changed a bit so that I can be in this. whole frame. Hmm. But nothing has changed too much. A bit has been changed. Oh. And plus, before, I didn't have any papers in front of me, but since I'm reading the articles and analyzing companies at the same time, I was thinking that it'd be better if I could write some of the concepts down into my paper and uh arrange my thoughts and talk at the same time. So like in this sheet of papers, I listed some of the I listed some of the companies that I invested into, and they're pretty much like the all the information that I got from reading articles. Uh, it's all looking really messy. If you look at it closely, it looks like it's a scribble, but it's all got meaning to it. Like uh, you would ask me what's on this paper. Uh, it's the list of companies and the reason why I bought this company shares. Uh, like on the other day, I was thinking to myself, it'd be better if I could write all of them down. The reason why I have to buy this company and the reason why I have to sell this company. If I track them down, not every day, but like 3 times a week or so, then it'd be better. So, and plus, this is a list of questions uh, that I would use to ask myself whenever I buy the share of companies, because like keep focusing on strategy is the most important thing. That's what I learned from Warren Buffett, the the best specialist in this era in terms of trading stock, right? So and above a bit here. Uh, Plus, I listed some of the stock terminology so that I could get more hang of it. Mm. Anyway, let's go back to article and let's read the what let's read the articles and see what he's trying to say. Here, many investors will follow the crowd. Yes, that's right. In some cases, their strategies are too short term. They count their profits in terms of days and have built portfolios they can't wait until the market recovers its values or start selling cheap. In other cases, investors simply act on emotion. Yes, that's right. Simply, investors act on emotion. They follow their fear or fear of missing out and often make worse trading decisions for it. Yes, that's right too. For example, with just one trading day left, it was undeniable that stocks were likely to record their worst January since 2008. Price road. Hmm. And blah blah blah, written by Eric Reed, freelance journalist based in Boston. Oh, okay, let's look at this one. Taking the broad view, there are two takeaways here. First, rules notwithstanding, don't invest in companies that don't deserve your money just because the stock has a high profile or has entered the deep. That doesn't always mean you should buy in. Look to see if they can answer simple questions like, can the company turn a profit? Duh, he's talking about uh, what everyone knows. Okay, next one we have is software growth stocks to buy. Watch or sell amid Nasdaq volatility. Worries over interest rates. Software growth stocks soared in 2020. Salesforce.com. Hmm. DocuSign. There's an article about DocuSign here. Is DocuSign stock a buy, hold, or sell? A CEO then Springer stated workers may be returning to the office, but they are not returning to paper. This says it all. DocuSign is still a transformative business driving the global transition to cloud based documentation. It operates in a $50 billion market in which it has a leading position and strong brand recognition. As Google is to internet search, the word DocuSign has evolved into a verb synonymous with signing agreements electronically. From a financial perspective, this means that DocuSign will continue to generate recurring revenue that gives investors good visibility into cash flows, even if at a slower pace than the unusual 2020-2021 period. Subscription additions from existing and new customers will only fortify these revenue streams. What also screams value is DocuSign's recently announced $200 million repurchase program that should provide a floor for stock and keep it trending higher from the post-earnings bottom. Investors that take the chance and sign on the dotted line here are getting a good deal. Okay. Okay, this is it. Let's look at some of the companies and then we'll talk about the ones that I invested. Okay. First one we have is Affirm Holdings is up 10% tonight. And what else do we have? 19% up equally. 10% up Fever International. Which is a good sign because I spent some money to it. Wicks and Fever. Wix.com, the digital enabler for entrepreneurs. Simple vision to make it easier for people to build websites with little to no coding knowledge or skills. The internet was still in its relatively early days then, and entrepreneurs were just starting to appreciate the benefits of an online presence. Wix has grown by leaps and bounds since that started in 2006 and now services 222 million users globally. What's happening with Wix? Many factors helped propel Wix to its present size. The company has evolved to provide a range of tools that help people create and manage websites. Wix also offers other online services such as analytics and e-commerce tools that help customers run their businesses. Hmm. Once in the Wix ecosystem, customers find it difficult to leave. Hmm. Those who have a high reliance on the Wix diverse set of tools, and the cost of switching is very high. That explains the tech companies' robust net revenue retention rates. Net revenue retention rate. Net revenue. Net revenue retention rate. NRR. Anything above 100% indicates that existing customers are spending more year over year. That customer retention has helped Wix more than double its revenue from $604 million to $1.3 billion over the past 3 years. But I believe Wix's best days are still ahead. As a start, the total number of paid subscribers is 6 million at the end of 2021, representing only 3% of the platform's registered registered user base. Wix should be able to convert some of these free users into premium users over time. The company has a history of adding new tools and services mainly through innovation and occasionally through external acquisitions. To grow customer spending, this trend will likely continue for the foreseeable future. Weekday stock price is down about 73% from its 52-week high, largely on concerns about volatility in demand for online services related to the COVID-19 pandemic. These concerns have kept management from generating any long term forecast with confidence. Investors don't like uncertainty, and the stock is being punished. But the pandemic is waning, and companies are becoming more confident about how to manage the situation. That should get Wix back on track and begin the stock price recovery, making now a good time to consider getting in on this beaten down growth stock. I totally agree with it. Uh, I even once thought uh, the other day that there's gonna be the day where people all over the world will use their own websites someday, and the company that helps its customer to build website freely will possibly not dominate, but will probably have large pool of customers. Mm. Let's go to Fever International. What does he say about Fever International? Similar to Wix, Fever International is a company that enables entrepreneur to carry out online businesses, but unlike Wix, which provides white label technology solutions to help its customers set up an online business, Fever provides a marketplace for freelancers to sell their services. Clients using Wix still need to acquire their customers, whereas freelancers and Fiverr get traffic from Fiverr's users. To put it simply, Fiverr is an online platform that connects freelance workers to potential corporate buyers. Fiverr almost single handedly invented this service as a product category, and both freelancers and buyers seem to like this approach. Instead of having to go through multiple platforms to find freelancers, uh, buyers can easily search for their desired product and place orders. On the other hand, freelancers get free traffic from Fiverr and use various tools to help grow their business. These tools include payment processing, project management, and more. Let's keep reading. By reducing the transaction friction, it resolves the pain points of both sellers and buyers. In return, the platform has flourished over the last few years. For perspective, revenue almost tripled from $107 million in 2019 to $298 million in 2021. Growth in buyers and higher spending per buyer drove the top line growth, while many digital companies expect a significant slowdown as global economies reopen. Fiverr continues to guide robust growth for 2022, forecasting revenue to grow at 25% to 27% year over year. Longer term, the tech company tends to benefit from the huge total addressable market. With a gross merchandise value of $1 billion in 2021, it has not even covered 1% of this opportunity. Gross merchandise value. Okay. Okay, that's enough for evening brief, and we'll talk about the ones that I invested in depth. Okay. First, we got, what do we have? Marco de Libre. Marco de Libre. My two best growth stocks to buy now and hold forever. Okay, hold forever. Conversation, statistics, market cap, enterprise value, trailing P&E, for P&E, P/E ratio, price, enterprise value, fiscal financial highlights, profitability, share statistics, stock price history, income statement, dividend splits, balance sheet, cash flow statement, historical data right here, profile, let's go to website. Okay, co-founder, chairman, CEO, press, online commerce platform in Latin America. It operates Mercado Libre Marketplace, an automated online commerce platform that enables businesses, merchants, individuals to list merchandise and conduct sales and purchases online. Okay. Financial. Its headquarters is located in Uruguay. Full-time employee, 29,957. Headquarter. Okay. Okay, Latin America. Latin America version of Amazon. Okay. Mercado Libre financials, income statements, and analysis, balance sheet, cash flow, analysis, revenue estimate, earnings history, EPS trend, options, holders, sustainability. Offshot uses big data and artificial intelligence to help banks lend more money efficiently. Upstart Holdings. Revolutionized the commercial and payment industries in Latin America. Go to Mercado Libre. Operates across 18 countries. 18 countries? Wow. And its business spans two high growth industries: e-commerce and digital payments. E-commerce and digital payments. E-commerce, digital payments. Better yet, it's the market leader in both cases. Its online marketplace averages 668 million visits per month, nearly 4 times more than the next closest competitor. First leader, and in total, its customer is like 4 times more than the next closest competitor. And its fintech platform has helped democratize digital payments in a region where relatively few people have a bank account or debit card. To further solidify its leadership, Mercado Libre has built a sizable logistics network. Logistics network that simplifies shipping for sellers. Accelerate delivery for buyers and lowers costs for the company. In the fourth quarter of 2021, nearly 90% of items sold in the marketplace were shipped through its managed logistics channel. So 90% of items sold in this website was using its own system, was using its own logistics network. That's up from 77% in quarter 4 2020. In other words, merchants are becoming increasingly dependent on Mercado Libre. Not surprisingly, it translated into a strong financial performance last year. Gross merchandise volume, GMV, rose 35% to $28.4 billion. Better yet, Mercado Libre's take rate hit 16%, up from 12% in 2020. In other words, Mercado Libre is keeping a greater percentage of GMV, showcases its pricing power. The result, revenue rocketed 78% higher to $7.1 billion in 2021. Future growth. Online retail sales are expected to reach $160 billion in Latin America by 2025. Tailwind for Mercado Libre's commercial fintech businesses, and with the stock trading at 8.3 times sales. Okay, excellent timing. 18 countries, people at 18 countries use Mercado Libre. It's using its main sector is e-commerce and digital payments, and in both sectors, Mercado Libre is the first leader in each sector, and mm, and it's got a way more customers than the next competitor, and it's like Amazon of Latin America. Its headquarter is located at Uruguay, and it's got own logistics network, and 90% of items sold in this website is using its own logistics network system, and so people are like more dependent on this platform. Okay. Uh, the next one we have is three tech e-commerce and fintech stocks cheaper than it's been in 6 years. Okay. Payment specialist appears better positioned to offer friendly returns to investors. Critical business process enabler is more than just a pandemic stock. Quality companies on sale. There's been a significant correction that has plagued tech stocks since mid-November, with the Nasdaq Composite Index slipping briefly into bear market territory this week. As a result, Wall Street is offering a long list of top-notch tech companies at a discount. History suggests that this could represent a massive opportunity for savvy investors, assuming they have the courage and resources to act. Company isn't a household name in the US, you'll be hard pressed to find online shoppers who aren't familiar with market industry leading e-commerce and fintech. Its value in just a few months, you might suspect there are underlying problems with the company's business model or its growth, but nothing could be further from the truth. In the fourth quarter, Mercado Libre reported net revenue 70% year over year in local currencies. While that's impressive in its own right, consider this: that growth is on top of 149% gains in the prior year quarter. Revenue from the company's e-commerce business climbed 67% year over year. Revenue from the company's e-commerce business climbed 67% year over year, an impressive feat in the face of record-setting comps. Growth within the fintech business was even more robust, with revenue that surged 81% on top of triple-digit gains in the prior year quarter. Contributing to those impressive gains were gross merchandise volume (GMV) and gross payment volume (GPV) that set quarterly records for the company. While sales growth is tamer than this time last year, it's impressive considering Mercado Libre doesn't have the pandemic-related tailwinds driving its growth. Company's tech ecosystem that is fueling the current results. While e-commerce and payments are Mercado Libre's bread and butter, a large and growing list of ancillary and service keeps customers and merchants coming back for more. Tonight, this is it, and I'll see you guys tomorrow. Okay, bye bye.